Hey guys, so I'm making this video today to show you how to make passive income in 2023 using a covered call strategy. Over the past year, I have spent numerous hours scouring the internet, looking through YouTube, watching videos, trying to find examples of people who use covered calls on a daily basis or a weekly basis to make a passive income by starting out with nothing more than maybe $2,000 to $3,000 in the stock market. Now, we're not going to be looking at huge numbers here. We're not going to be looking at making a monthly income where you can retire, but everybody has to start somewhere. I started my journey in 2022 after I lost a bunch of money using options and playing the stock market like a day trader, and I got my butt handed to me. After I lost nearly everything trying to play options, trying and buy and missing every single movement in the market, realizing I'm not a great day trader, I decided to look into covered calls. The first thing I knew I had to do was I had to learn how to sell a covered call and what exactly was a covered call. So after spending some time on the internet, like most of us do, learning about what these covered calls are, which you can find over here, my explanation on what a covered call is and how you use them, I determined that this strategy could possibly work. Now, I didn't have much money and I wasn't really expecting much from it, but I knew that if I started somewhere, I could probably make a little bit, $10, $20, $30 a week, and that would be just enough to put a little bit more money in my bank account. So after spending months scouring the internet, looking through YouTube videos, watching all these different people explain to me what covered calls were, why they work, why they don't work, what you should do, what you shouldn't do, I still never saw a single video or a single example that showed me a real life account that gave me something to go off of that says this actually can work. Now, some people touted how they make $20,000 a month and $10,000 a month. You can do this and do that, but I didn't want to do any of that. All I wanted to do was to figure out if I can take $2,000, $3,000, $4,000 and make money while also gaining value in my portfolio so that my asset, whatever stock or ETF or mutual fund it was safe from not only the bear market, but losing value if I sold my covered calls too soon, too late, if I went too high strike price, whatever it may be. I wanted to learn, but I also wanted somebody to show me, if that makes sense. So this led me to kind of practicing myself, figuring out what works, what doesn't. And as of today, in 5 months, I have built a portfolio worth $30,000, making me consistently $1,000 every 2 weeks and $2,000 a month. Now, while this is by no means a no-risk solution, why this is by no means, I'm not touting that I am doing this and expecting the market to fly up and expecting to make this every single week. I'm averaging this and I'm pretty happy with it. I want to show that anybody that has $2,500 or a little bit more, a little bit less in their bank account right now can start using the covered call strategy to build their equity in the stock market and make a passive income monthly that helps them month to month to have a little bit of extra money in their account. My overall goal when I started this was I want to stop working for somebody else and I want to work for myself. Now, I'm years away from being able to do that. I still love what I do, but at the end of the day, I want to do what I do for myself, not for other people. To me, a passive income is the best solution. Now, if you want to, you can go ahead and skip ahead to where I show you my account, the different metrics of it, what I'll be following. I have it all laid out in a spreadsheet that I'll share here in this video. But before I get into that, let me kind of give you a little bit of backstory about me. So I started investing in 2017. I was young, I was in my 20s, I had the world ahead of me, and I had actually quite a bit of savings in my account from some summer jobs throughout the years and just overall savings through college. When I got out of college, I took that savings and I put it in the stock market. I was eager, I was aggressive, I was ready to go. Before the end of the 2017, I had lost over $5,000 of that. Now, to me, when you're a 20-something-year-old just starting out and you have $10,000 and you invest it and you lose 50% of that within a couple of months, that's a big deal. So I was pretty discouraged, right? Well, I kept trucking along. I kept reviewing my different strategies, figuring out what worked, what didn't, what companies I liked, which ones. And by 2021, I had built up a portfolio worth $40,000. Now, I had taken money in and out of the market, and thanks to the bull run of 2020 to 2021 and some good stock picks, I made a decent amount of money. I'm sure a lot of people had. However, after 2021, January of 2022, the market started going down, and I myself was stuck in a bull mindset. Because of this, I started playing options like one typically does when they want to make a lot of money really fast and have no idea what they're doing. And I joined Wall Street Bets. Those two things provide for the perfect hurricane or storm. And I easily, within the next 4 to 5 months of 2022, lost my entire account. I had built it up to 40 grand and I had $0 left after 6 months. I decided to take what I could scrounge up for the next couple of months and put it into the stock market. By September, I started out an account with about $2,500. I started using any random stock I could find that I could buy 100 shares of, and I started selling covered calls on those stocks. Now, I had made some mistakes. I had lost money using covered calls, or you can actually do that. I had gained a lot of money using covered calls as well, and after a little bit of a windfall, I was able to put about $18,000 in the market. I had actually taken out, from changing jobs, money in my 401k, which I don't suggest people do, but I wanted to really give this a go. And I started using covered calls to really build my portfolio. Within the first month of using covered calls, I had lost money on the market. I didn't necessarily lose money selling covered calls, but I lost money on my initial stock value. Now, because of this, I didn't lose nearly as much as what I could have had I not been selling covered calls and held onto the stock. So I was actually pleasantly surprised when I did the math to find out that I only lost like 10%, but compared to what I lost in value of the stock was nothing compared to what I gained in the value from the premiums on my covered calls. So I went full force into this. I started really putting everything I could. I started putting as much money into the market as I could, and I started using a little bit of margin. I'll get into that in another video because that is a very risky option for you to use, but it works in my favor. And I will go into in another video how to use margin in a low risk way in order to help build your portfolio for the long term. So that brings me to today. I have built my portfolio from roughly $18,000 all the way up to $33,000. I have done this by selling covered calls aggressively in a bear market, as well as from my stock value and reinvesting my premiums that I get from selling covered calls back into the market, buying more shares of the stock to be able to grow my shares. So if you've made it this far in the video, or you haven't skipped ahead yet, you're probably asking, well, that's a great backstory and that's some great information, but does this actually really work? Are you actually making this much money? And if you are, prove it. Because just like every other video I've watched, nobody seems to be able to prove that they're actually making a passive income worthwhile using covered calls while also building their portfolio value. So let me show you guys using an Excel spreadsheet just how I've been able to do this. All right, guys, so here's my 2023 portfolio. In this portfolio, you'll see that I'm using Intel. The reason I'm using Intel is I want to choose a stock that's around $25. That way, when I buy my first 100 shares, then be able to sell one covered call that's around $2,500, which is about what people have in their accounts, or I expect people to have in their accounts if they're just kind of starting in the market, or if they want to give this whole strategy a test based off my video. For this one, you'll see that I've laid out a couple of metrics across the board. The first one being the cost basis. I want to show what I'm buying the stock at, how many shares as I'm adding. So hopefully by the time we're all the way down to week 52, you'll see that I have plenty of shares matching up to about that $10,000 mark, which is my goal by the end of the year. I'll show you the equity of those 100 shares at whatever cost basis I have. You can see that my equity grew a little bit through the 2 weeks from 25 to 2,800, although I did add $200. So I'm showing how much I'm adding, as my goal is to add money every week to this account. Going down the line, you'll see that I have a covered call strike. That's what I'm selling my calls at. So in my first week, I sold a little too low at $26.50, although I did receive a good premium for that. I did not expect for the stock to go up this past week, but it did, and so I did have to sell, which means I did lose out on a little bit of equity build from that actual stock price, but that's okay. It's not the end of the world. I expect that going into selling covered calls to happen, but over the course of the full year, it should equal out roughly if we're choosing the correct covered call strikes. Here you'll see that I have the gain or loss, which is just my max equity subtracted from my initial equity. So that usually will always be a gain if the covered call is executed. So you'll see that in this week I did actually get a gain of $66 in my equity of the stock. Premium per covered call, you'll see that's in cents. Most covered calls are in cents because it's selling that per share. So I'm getting 36 cents per share times 100 shares, and that will mean that my total premium right here will be $36. Add those two together and you get 102 total return if my actual covered call is executed, which again this week it was. That means that my ending equity was $2,686. Now, going into week 2, I added $200. The reason I did this was I wanted to, again, be able to buy 200 shares. So I did have to add a little bit of money for what the current price of Intel was. And that brought that initial equity for week 2 up to $2,874. When I say I'm going to go for a goal of $10,000, that's included putting about $200 a week. So we'll see how that pans out. Right now, I decided that based off of this upcoming week's events that'll happen, including our CPI report, as well as a couple of speeches happening, that I was going to go a little bit higher on the strike price. The reason I did that is, I don't want to miss out on potential gain. I kind of see this week as going up, or the stock market as a whole going up. There's not much more bad news that I see coming into the next weeks, and we'll adjust based off of how the stock market kind of reacts. Now, if it does react negatively, that's not a big deal because, again, we won't have to sell our shares, so we'll keep our initial shares, but we will make a premium of $20 this week. We will not make the total return of $146, but we will make $20. So you can see how $20 is just handed over for the actual covered call. So within 2 weeks now, we've made $56. That means that we're kind of shooting for about $100 a week right now. At the end of this week, I'm going to go ahead and update you guys, let you know what happened, show you where my ending equity was, if the actual covered call got executed, and if I'm going to go ahead and add $200 into the price or into my equity. So stay tuned. We'll get back to this, but hopefully this will allow you to kind of see how a real life example of covered calls work week to week and how you can actually make a premium or not a premium, but you can make a income passively just by selling one call a week and having to look at your account once a week. There are other instances where I may do a little bit more movement on the account. Say the market goes down pretty aggressively. I will end up closing out some of my covered calls and reestablishing new covered calls to make a little bit more equity. But for right now, I don't want to go too deep into that because that does require some explanation. All right, now we're going to go ahead and move over to our next sheet. All right, so moving on to my second portfolio here, you can see that this is my main portfolio. I carry shares of AMD in this portfolio. That's what I'm selling covered calls on. I personally have been trading AMD for a very long time. I love their company. I love the CEO. I think that they're doing great things, and they have done a great job of actually following their roadmap and executing on all of their metrics. Overall, I do expect AMD to kind of stay stagnant or go down a little bit this year, but I'm not too worried about that as this is a much longer hold for me than just a couple of years. So with that said, I figured it'd be a great stock to build my share count as well as my equity on, and that's what I have done over the past couple of months. That's what I've built my portfolio up to $33,000 with. As well as they do actually give great premium per call. I'll get into that again in another video as to how to choose which companies and which ones have more, give you more premium per call and which ones do less. It's a risk versus reward kind of thing to look at. But overall, AMD is a heavily traded stock. It has huge premiums and it's a great company. So what is there to lose? So starting off, I have 1,000 shares at $64.03. You'll see here that it is $64,000 of equity. On this account, I do use margin, as I stated previously. It does cost me about $300 to $600 a month, depending on how many trades and what I'm holding in that account. So do keep that in mind that is calculated kind of into the whole return monthly that I get from premium. So for week one, I had an idea, or I kind of figured that the stock market would go down a little bit. It actually did, so that was a great play by me, in which case I had a total return from that week of $660. Now, I closed this contract out early because of a couple reasons, but mostly I'd watched the market go down. I assumed, or I hit a point in where I figured it would stay and start heading back up, and that's what it did in a little bit, but it kind of more stayed stagnant. So I ended up selling another covered call after closing that out at a $65 strike. That gave me a little bit more wiggle room, so I didn't feel so nervous about the stock going up. Now, the stock did trend down a little bit during this time, so I ended up closing that one out as well. That way I could lower my strike price as well as pull a little bit more money out of it. And you can see here that I had a total, if we get this to work, that I had a total of $1,340 for the first week. Now, I did end up closing out that third call. I got greedy. I probably should not have done that. I wanted to make a little bit more money on Friday, but I jinxed myself. So I ended up selling a covered call again at a 62 price. The reason why this was a really bad move was because this was actually $2 lower than my cost basis. Now, had I done this correctly, what I should have done was sold this call as well as bought a total of 10 call options at a price that I assumed would be a little bit higher, let's say $64. That way, if it did go above $64, I was covered, and I didn't lose much equity. Had I done that, based off of where the market ended, then I would have recovered the money that I lost, which was about $2,170. So all in this week, I ended up losing money because of that stupid move. And I made $1,470 on my total premium, but I did end up losing $2,170 of my equity. So I had a negative amount. Following into week two, I had, after taking that hit, I decided, kind of similar to the Intel idea that the market's going to go up, I wanted to give myself some wiggle room. So on Friday afternoon, I had decided that I was going to sell a heavier or a much higher strike. Monday comes around. Monday morning, I sell a strike. I get $83 per share, or 83 cents per share, for a total of $747, because unfortunately, due to my $2,000 loss, I now only had the ability to buy 900 shares. I did have a little bit more equity than $5,700 in the account, but I just said, you know what, I'm not going to buy additional shares and just keep it, even. That way I'm only selling calls, and all my shares are kind of have insurance on them. This week, beginning of Monday, we shot up past $67. Currently, I think we're trading at about $68 a share. So I am losing a little bit of return or equity from initial stocks, but we'll see how the end of the week turns out. If tomorrow we go down, I may end up closing out this call if I can get some money for it and move it into a $68 or $69 call, or I could just roll the call over to next week, in which case I will make a good bit more money, but I will kind of forfeit making money this week for making more money next week. We'll see how I play out that, but I'll keep you guys in a loop there. We don't have ending stock value here yet because it's middle of the week, but we'll continue to report on this one. But I am showing so far that I have a $1,470 premium that I've gotten, so that's how much money I've made in a week. Not counting what I've lost on my equity here. If you just look at this, you can see how this will add up. So following this through for the next 2 to 3 weeks, and I'm not actually including the 747, so it will be a little bit more than that. But you can see how if I'm making $1,400-ish this week, and if I play a little bit more safe, I'll make about $700-800. That I'm making about this week. I make $3,000 or a little bit more in premium for passive income. So that sums it up. We'll continue this in other videos so you can see week by week. Every week I'll update you, give you my plays, let you know my mistakes. I don't want to be, or I don't want to hide anything. I want to be as transparent as possible so you can see somebody who, has feelings, has emotions, how they kind of play a stock market, good or bad. Because I am doing this videos, I'm going to try to be conscious of the moves that I make so that we are showing positive income no matter what. But let me know what you guys think. I'm always open to suggestions. I understand that using margin is not a great idea, so you don't have to tell me that. But so far, it hasn't bit me in the butt as long as we don't have a major market decline. Even if we do, I usually am watching my portfolio, daily, so I know what the stock market's doing. I'm pretty heavily involved in reading up on stock market news, following trends, all that kind of stuff. I appreciate your time, so thank you very much. Let me know what you guys think. Like, comment, and share, and follow along with my journey. I'm going to be posting a video once a week, every week, the best I can, so that you guys can see how these portfolios are doing and how I'm doing each week and monthly selling covered calls. That's it until next time, guys. Take care.